Dorothy is 67 years old. She's lived in the same small town in Ohio for 43 years, banking at the same community bank for over 2 decades. The tellers know her by name, she's never bounced a check, and she's maintained pristine credit her entire adult life. 3 weeks ago, Dorothy walked into her bank to withdraw $8,500 in cash to pay a contractor who was repairing her roof after storm damage. The contractor had given her a discount for cash payment, and Dorothy thought she was being financially responsible. When the teller asked about the purpose of the withdrawal, Dorothy said something that seemed completely innocent at the time. 5 words that she thought were just friendly conversation. But those 5 words triggered an automatic compliance review that froze her account for 6 days, generated a federal suspicious activity report, and resulted in Dorothy being treated like a potential criminal by the same bank where she'd been a valued customer for over 20 years. What Dorothy said was, "Keep this between us, okay?" She meant it as a casual comment about the contractor discount, the way someone might mention getting a good deal on something. But to the bank's compliance system, those 5 words suggested potential structuring, money laundering, or elder financial abuse. Within hours, Dorothy's account was flagged, her withdrawal was reported to federal authorities, and she found herself trying to explain to bank investigators that she wasn't doing anything wrong. Dorothy's experience is not unique. In fact, it's happening to thousands of retirees across the country every month, and most people have no idea that certain phrases can trigger immediate federal banking compliance reviews. What's worse, once you're flagged in the banking system, that flag follows you. Future transactions get scrutinized more closely, account openings become more difficult, and you can find yourself under suspicion for completely normal financial activities. Today on Jordan Retires, I'm going to walk you through exactly which words and phrases trigger automatic compliance reviews at banks, credit unions, and other financial institutions. I'm talking about the specific language that sets off red flags in the systems that monitor every conversation you have with bank employees. And I'm going to explain the federal banking laws that make these reviews mandatory so you understand why this is happening and how to protect yourself from innocent mistakes that can have serious consequences. If you're new to Jordan Retires, hit that like button right now and subscribe, because this channel exists to explain the financial landmines that can destroy your retirement security. Not the obvious stuff that everyone talks about, but the hidden regulatory traps that can turn routine banking into a federal investigation. Today we're going deep into banking compliance rules that most people over 65 have never heard of, but desperately need to understand. Stay with me, because by the end of this video you're going to know exactly what to say and what never to say when conducting banking business after age 65, and you're going to understand why banks treat older customers differently than younger ones in ways that nobody explains to you. Let me start with the foundation, because you cannot protect yourself from these compliance triggers until you understand exactly why banks monitor your conversations and what federal laws require them to do. Every bank in America operates under federal anti-money laundering laws called the Bank Secrecy Act and the USA Patriot Act. These laws require banks to monitor customer transactions and conversations for signs of suspicious activity. When suspicious activity is detected, banks must file suspicious activity reports with the Financial Crimes Enforcement Network, which is part of the Treasury Department. These reports can trigger federal investigations, account freezes, and in extreme cases, criminal charges. Here's what most people don't understand. The definition of suspicious activity is incredibly broad, and it includes many things that seem completely normal to regular bank customers. Banks are required to report any transaction or pattern of transactions that they know, suspect, or have reason to suspect involves illegal activity, appears designed to evade federal regulations, or lacks a clear business purpose and involves substantial amounts of money. The key phrase there is appears designed to evade federal regulations. This is where innocent comments can get you in serious trouble. Any statement that suggests you're trying to avoid reporting requirements, even if you're not actually doing anything illegal, can trigger a mandatory report. Now, here's why people over 65 are particularly vulnerable to these compliance triggers, and this is something that banks don't advertise, but that every retiree needs to know. First, older adults typically deal with larger amounts of cash than younger people. You're more likely to be paying contractors, making major purchases, or moving money between accounts as you manage retirement income. Larger cash transactions automatically receive more scrutiny under federal law. Second, banks are specifically trained to watch for signs of elder financial abuse. This means they're looking for patterns that might indicate someone is being pressured or manipulated into withdrawing money. While this protection is generally good, it can result in legitimate transactions being flagged when you use certain language. Third, many retirees are less familiar with modern banking technology and more likely to conduct business in person with tellers. This creates more opportunities for verbal interactions that can be misinterpreted or trigger compliance concerns. Now, let me give you the specific words and phrases that can trigger immediate compliance reviews. And I want to be very clear about something. These are not words you should never say in any context. These are phrases that, when said in a bank setting in connection with financial transactions, can cause problems. The first phrase that triggers reviews is exactly what Dorothy said. Keep this between us, or any variation like, this is just between you and me. Don't mention this to anyone, or can we keep this quiet? Banks interpret these statements as potential structuring attempts, trying to avoid federal reporting requirements, even if you're just being conversational or referring to something completely unrelated to the transaction, saying this can flag your account. The second phrase is, I don't want this reported. Any statement suggesting you want to avoid reporting triggers immediate compliance concerns. This includes variations like, is there a way to avoid paperwork on this? Or, do you have to report this transaction? Banks are required by law to report certain transactions, and any suggestion that you want to avoid reporting makes them assume you're engaged in illegal activity. The third phrase is, my family doesn't know about this. Banks are trained to watch for elder financial abuse, and this phrase suggests potential exploitation or manipulation, even if you're referring to a surprise gift for your family or a legitimate financial decision you've chosen not to discuss. This language can trigger elder abuse protocols that result in your account being flagged and social services potentially being contacted. The fourth phrase is, help me get around the limit, or any variation like, is there a way around this restriction? Banks have various limits and reporting requirements, and asking for help circumventing them suggests you're trying to evade federal regulations. This applies to daily withdrawal limits, wire transfer reporting, cash transaction reporting, and other regulatory requirements. The fifth phrase, and this one surprises people, is, I need cash because I don't trust banks. While distrust of financial institutions might seem like a reasonable sentiment, expressing it while conducting business at a bank suggests you might be involved in illegal activities that require cash transactions. It also suggests potential money laundering concerns to compliance officers. But it's not just these specific phrases. There are additional words and concepts that can trigger to reviews, and I want you to understand the broader pattern so you can avoid problems. Any mention of avoiding taxes in connection with cash withdrawals can trigger to reviews, saying something like, this way I don't have to pay taxes or the IRS doesn't need to know about this can result in your transaction being reported to federal authorities. Even if you're referring to a legitimate tax strategy, banks err on the side of caution and report anything that suggests tax evasion. References to gambling, especially large cash withdrawals for gambling purposes, trigger automatic scrutiny. Casinos have their own reporting requirements, and banks monitor cash flows to and from gambling establishments closely. If you're withdrawing cash for a legitimate trip to Las Vegas or a local casino, just say you're withdrawing cash for personal use. Mentions of international transactions or sending money out of the country receive enhanced scrutiny, especially for older customers. Banks monitor international wire transfers closely for money laundering and terrorist financing. If you're legitimately sending money to family members abroad or making international purchases, be prepared to provide documentation and avoid any language that suggests you're trying to hide the transaction. Any suggestion that you're under pressure from someone else to conduct the transaction can trigger elder abuse protocols. This includes seemingly innocent statements like, my son told me to get this cash, or my financial advisor said I should withdraw this money. Banks are required to ensure you're not being coerced or manipulated. Here's something else that can trigger reviews that most people don't think about: inconsistent stories about the purpose of transactions. If you tell the teller one thing about why you need cash, then mention something different to another employee, the inconsistency gets flagged. Banks maintain detailed records of customer interactions, and contradictions raise suspicions about the true purpose of transactions. Now let me explain what happens when these compliance triggers activate, because understanding the process helps you appreciate how serious this can be. When a bank employee hears trigger language or identifies suspicious patterns, they're required to file a suspicious activity report within 30 days. They cannot tell you that they're filing this report. Federal law actually prohibits banks from informing customers that SARs have been filed. The report goes to the Financial Crimes Enforcement Network, where it's analyzed by federal investigators. Depending on the content of the report, several things can happen. Your account might be flagged for enhanced monitoring, meaning all future transactions receive additional scrutiny. You might be placed on watch lists that affect your ability to open new accounts at other banks. In serious cases, federal agencies might open investigations that can include account freezes, asset seizures, and criminal charges. Even if the investigation concludes that you've done nothing wrong, the flag in the banking system doesn't disappear. It follows you to other financial institutions and can affect your ability to conduct normal banking business for years. Here's what Dorothy discovered after her account was frozen. The compliance review process is largely automated, and there's very little human judgment involved in the initial flagging. When she said, "Keep this between us, okay?" the teller was required to note the comment in her transaction record. The bank's compliance software automatically flagged the transaction for review because it contained trigger language. Once flagged, the review process followed federal protocols that prioritize caution over customer convenience. Now, let me give you the strategies that experienced retirees use to avoid these compliance triggers while still conducting their banking business efficiently. The first strategy is to keep your language simple and factual. When bank employees ask about the purpose of transactions, give brief, straightforward answers. Home repairs, personal expenses, or cash for shopping are all perfectly adequate responses. Avoid elaborating or providing unnecessary details that might contain trigger language. The second strategy is to understand reporting thresholds and plan around them. Banks must report cash transactions over $10,000, but they also monitor patterns of transactions just below that threshold. If you need more than $10,000 in cash, it's better to take it in one transaction and accept the required reporting than to structure multiple smaller withdrawals, which is actually illegal. The third strategy is to build relationships with bank personnel and maintain consistent patterns. If you regularly withdraw cash for specific purposes, let your banker know about your typical transactions. When bank employees understand your normal financial patterns, unusual transactions are less likely to be flagged as suspicious. The fourth strategy is to use documentation when possible. If you're withdrawing cash for a major purchase like a car or home repairs, bring documentation that explains the transaction. A repair estimate, purchase agreement, or invoice can help bank employees understand the legitimate purpose of your withdrawal and reduce suspicion. The fifth strategy is to understand that certain types of transactions receive automatic scrutiny regardless of what you say. Large cash withdrawals, wire transfers, purchases of monetary instruments, and transactions involving foreign countries all trigger enhanced monitoring. Except that these transactions will take longer and require additional documentation. The sixth strategy, and this is important for married couples, is to ensure both spouses understand your financial activities. Banks are trained to watch for signs that one spouse is being manipulated or coerced by the other. If your spouse doesn't know about financial transactions you're conducting, that can trigger elder abuse, concerns, even in completely healthy relationships. Let me address something that comes up frequently in questions from viewers, whether you should switch banks if you've been flagged for suspicious activity. The answer is complicated because the banking system is interconnected, and flags often follow you between institutions. If you believe you've been unfairly flagged, your best strategy is usually to work with your current bank to establish a clear pattern of legitimate activity. Document your transactions, maintain consistent explanations for your financial activities, and avoid any language that might reinforce suspicions. Switching banks often makes the situation worse because new account activity at different institutions can itself trigger additional scrutiny. However, if you're dealing with a bank that's overly aggressive in its compliance monitoring, or if bank employees are treating you poorly because of previous flags, it may be worth consulting with a banking attorney who specializes in compliance issues. There are legal remedies available if banks are violating your rights or discriminating against you based on age. Let me bring this back to Dorothy because her experience illustrates both the problem and the solution. After her account was unfrozen, Dorothy met with the bank manager to understand what had happened. The manager explained the compliance requirements and helped Dorothy understand how to avoid future problems. Dorothy now keeps her banking language simple and factual. When she needs cash for contractors or other services, she says cash for home expenses and doesn't elaborate. She's also established a relationship with a specific banker who understands her typical financial patterns. Most importantly, Dorothy learned that the compliance system is designed to be overly cautious rather than customer-friendly. The bank employees weren't trying to make her life difficult. They were following federal regulations that prioritize detecting illegal activity over customer convenience. Understanding this helped Dorothy adjust her approach to banking while maintaining her financial independence. Here's what I want everyone watching this to understand. These compliance requirements aren't going away. If anything, they're becoming more stringent as federal agencies focus on elder financial crimes and money laundering. The banks aren't choosing to monitor your conversations. They're required by federal law to do so, and they face severe penalties if they fail to report suspicious activity. Your best protection is understanding how the system works and adjusting your behavior accordingly. This doesn't mean you can't withdraw your own money or conduct legitimate financial business. It means you need to be aware that certain language and behavior patterns trigger automatic reviews that can cause significant problems. The American banking system does not come with a manual that explains these compliance requirements to customers. Banks are actually prohibited from explaining many aspects of their suspicious activity monitoring. You're expected to navigate this system without understanding the rules that govern it, and the penalties for innocent mistakes can be severe. That's exactly why Jordan Retires exists. If this video helped you understand something important about banking after retirement, if it showed you how to avoid innocent mistakes that could cause serious problems, or if it helped you realize why a previous banking experience was more complicated than it needed to be, I want you to share it. Share it with friends who might unknowingly use trigger language at banks. Share it with anyone you know who's had unexplained problems with banking transactions. The strategies in this video can prevent people from experiencing the stress, embarrassment, and financial disruption that comes with being flagged in the banking compliance system. But they only work if people know about them before they need them. Drop a comment below and tell me about your banking experiences. Have you ever had transactions flagged or questioned? Have you noticed increased scrutiny at banks since reaching retirement age? Have you tried any of these strategies? Tell me what's working, what isn't, and what banking topics you want me to explain in future videos. Every comment gets read, and your experiences help shape what we cover next on this channel. Thank you for watching, stay aware, and I'll see you in the next video.